Calls to cut the RBA cash rate. Let's have a look. Hello everyone, Florian Heise here and welcome to another episode of HeiseSays. I have my stein of coffee and I thought we'd have a look at this article from news.com.au written by Alexis Carey about an analyst predicting an RBA rate cut tomorrow. Because if we look here at the ASX rate indicator, the probability, 82% on February the 28th are saying no change, and decreasing to 0.5 is 18%. Now that's gone up since the 19th of February, and of course a lot has happened in the last few days. So it will be interesting to see if we will get a rate cut tomorrow. Now if we have a look here, the cash rate is already at 0.75. If it goes down to 0.5, do you think it would help stimulate the economy more? Or will it just cause further damage to consumer sentiment? Do you think it will dash that confidence that people seem to have, probably by reading all the domain articles about property skyrocketing? And that's the question. How much will the banks pass on to those of us that have a home loan? Let's have a look. Let's have a look at this article, guys. So analysts say RBA interest rate cuts are looking likely tomorrow following the coronavirus havoc. Now, Rachel, my wife, has just gone to the shops. She went to Aldi, and because I was talking to her, because people are saying in the comments, went to my shop, it was completely empty. No toilet paper, no this, no that. And I said, oh, Rachel, maybe we should stock up. And I mean, we already do monthly shops, and it's at the end of the month, so we were due for it, but we hadn't run out of a lot of stuff. I think the kids are most fretting over icy balls. We buy our meat by the beast, so I'm not too worried about that because our cows aren't imported. If anything, there's going to be a surplus of beef on the market with all the stuff meant to be sent overseas. What are they going to do with it? Hopefully, it'll drive prices down. Get another beast in the freezer. Stock up, guys. And other odds and ends. She went to Aldi and they were busy, but there's only they were out of rice and things like that. But we're in Sunnybank, so I'm not surprised people would stock up with rice in this suburb. Although we don't tend to eat much anymore either. So there you go. What are your stories of stocking up? Because I was talking to a client. I just got off the phone to him and I said, have you prepared for the end of the world? And he laughed, and he already did. Before any of this happened, he said he had about a month's worth of food in the garage just out of habit, because they've had issues with being cut off or not having access to it. So there you go. There you go. Us crazy preppers need to unite. So let's have a look. A March interest rate cut is looking more and more likely as the global economy continues to cop a battering from the coronavirus outbreak. Analysts are now predicting the Reserve Bank of Australia will cut the cash rate from the already historic low of 0.75 to 0.5% when it meets tomorrow afternoon. Australia's official cash rate has remained at 0.75 since October 2019, following two earlier rate cuts that year. And those rate cuts, I'll bring up the chart here, you can see how drastic they were. Bam, bam, very close together. And I would argue that did a number on our consumer confidence. That's why it's heading down. Pundits have long claimed a further rate cut within the first half of 2020 was all but inevitable, but the ongoing coronavirus crisis has accelerated the urgency. Last week, the S&P 500 experienced its worst week since the financial crisis, with more than $6 trillion in value wiped, while the ASX also lost billions. According to IG market analyst Carl Roeder, there was now an 87.5% chance of a rate cut tomorrow, with 2 cuts by October widely expected. So I need to find out where they're getting that figure from, because the RBA rate indicator on the ASX that I'm looking at here, it hasn't been updated. So if anyone could let me know, please mention it in the comments, guys. I'll have a look at it. So back to this. Leading into the close of US trade, it became considered close to a certainty that the RBA will cut rates on Tuesday, he said. The move was dramatic, with the implied odds of a rate cut from the RBA only 7% 2 days earlier. that drove the Australian dollar to fresh lows on Friday night. He said the AUD USD, Australian US, temporarily traded at 0.644 or 64.4 US cents, as markets forecast the RBA will cut rates by the end of the year. Boy, it is a sentiment echoed by a slew of other economists. Well, they are forecasting by the end of the year, but we need to know, will it happen tomorrow? So it is a sentiment echoed by a slew of other economists who believe the RBA may be pushed into slashing rates tomorrow in a bid to soften the impact of a potential virus-fueled global recession. And if you've watched my video about just international trade, it's quite shocking seeing how much trade goes through China. And if we bring up, I'm going to do it, guys, I'm going to bring up the OEC just to show everyone who, remember, for some people this is the first time they've been exposed to this, to looking at the percentage of what Australia's importing. All of that will get more expensive as the dollar declines. Our cars, broadcast equipment, refined petroleum, all of these will be cheaper for people to export. But you've got to remember, demand for iron ore, coal and petroleum gas is all going to decline if the global economy enters a recession. Gold may go up as people try to seek a safe haven. And if we scroll down here, 35% goes to China, then Japan and South Korea. Then our origins for our imports in the countries, 24% is from China as well. So Australia is uniquely vulnerable to a China-led global recession. I'd put that argument forward. JP Morgan chief economist Sally Auld has previously said 2020 rate cuts were almost a certainty, but they could now come sooner than expected. I think the risk is now that those come earlier than we had forecast, potentially as soon as this week, Ms. Auld told ABC television on Sunday. As the days and weeks go on, it becomes very clear that the hit to growth here is probably going to be reasonably significant. The Morrison government has already indicated it will take targeted action to support parts of the economy that have felt the initial impact of the virus, and Shadow Treasurer Jim Chalmers is open to a stimulus package to assist the impact of the virus, but argues the economy has been in desperate need of support for some time. But not everyone is convinced a rate cut is the best course of action. The Australian National University's RBA's Shadow Board said the official cash rate should remain at 0.75 in the face of global concerns and market slumps caused by the coronavirus. The Shadow RBA noted weak wage growth and persistently low inflation were also strong reasons for rates remaining unchanged. Fear about a global coronavirus pandemic are already taking their toll on world financial markets and are likely to impose significant economic costs on the Australian economy should the crisis worsen, RBA Shadow Board Chair Dr. Timo Henkel said. Tepid wage growth. Well, we all know why this is one of my favourite charts, don't we? Tepid wage growth, a slight increase in the unemployment rate, and an inflation rate that remains below the Reserve Bank of Australia's official target rate of 2 to 3% all point to economic weakness. And according to the latest quarterly data, a key variable for gauging inflation or inflationary pressures, as well as the outlook for consumption, expenditure, real wage growth remains worryingly low at 0.4% year on year. Well, why would wages grow, guys? There's not enough demand for workers in the economy right now. Meanwhile, the US Federal Reserve indicated it will cut back its benchmark this month, and AMP Capital Head of Investment Strategy, Shane Oliver, told The Australian it was likely the RBA would also cut Australia's official cash rate. The US Fed is effectively signalling it will cut rates in 2 weeks' time, and if the biggest central bank in the world is worrying, then we should start worrying as well, he told the publication. Against the background of already weak economic growth and the threat of further weakness to come, the benefits of another interest rate cut, which includes keeping the dollar down, likely outweigh the costs. Well, there you have it, guys. There you have it. What do you think? Do you think we'll get a rate cut tomorrow? Do you think it will actually make an impact on consumers? I'm concerned that it will have, I'm concerned that it'll dent consumer confidence, and most people will do exactly what I would do and just use it to pay off their debt to their mortgage faster. I don't know if people are going to rush out and spend. I don't know. What's your opinion, guys? Do you think they'll do it? And if so, will it be passed on? And if it is passed on, will it actually stimulate the economy? Will people go out there and spending more? Maybe people are going out spending more now as a panic is starting to set in. People are worried. They're stocking up. But that's only going to be a slight blip in the retail sector. We'll have to wait and see. Let me know your thoughts and opinions, as always, in the comments, everyone. Please like, share, and subscribe. If you're a fan of the channel and you want to help me produce more content, there are a few ways you can. You can just share the videos, get it out there, and help the channel grow. You can support us by joining us on Patreon and making a small monthly donation. You can also do the same here by joining the channel on YouTube. We have affiliate links with Amazon and eBay for your consumer purchases, where we receive an advertiser's commission that doesn't cost you a cent. We also have referral links for Independent Reserve and Kucoin for the crypto traders out there, where we will get a portion of the fee that you pay. Doesn't cost you anything either. We have pocket squares available right there behind me, you can see. Perfect for any function or event. And PayPal if you want to contribute that way. Thanks to everyone who's helping the channel grow. Take care, and I will see you next time. Bye for now.